The National Investor's motto is, you can get information anywhere, but here you get knowledge. And for well over 40 years now, Chris Temple has imparted that knowledge, an unparalleled, understandable, and useful take on the big picture of the markets and of our world. He has been out in front of what you see on the news every day on many themes. More, Chris has taken this macro knowledge and his unique analytical abilities to uncover unique investment opportunities. Often, he has guided his members to big winners in resources, biotech stocks, and more. His talents and connections often getting him into ground floor opportunities before they are discovered. Without further ado, here is Chris with today's topic.
Welcome back, everyone, or if you're here for the first time, welcome. I'm Chris Temple, editor and publisher of the National Investor, and today we're going to renew our story about Prairie Operating Company. Prairie is a relatively new player in the domestic energy industry here in the U.S. It's listed on the NASDAQ under the symbol PROP. And in just a moment, Ed Kovalik, who is a founder of the company and presently also the chairman and CEO, will be joining me. Before he does, the usual preliminaries, he and or myself might be making forward-looking statements or otherwise giving our best intentions and best outlooks on different things. Those things may or may not happen as and when one or the other or both of us might say, so be aware of that. The other thing I want to point out too is that Prairie for a while now has been a recommendation of mine in the National Investor. They didn't pay for that. I recommend companies based on their merits and what I think the outlook is for the company based on that and my macro outlook and a whole bunch of other things as well. But Prairie, from time to time, as do some other companies that I recommend, engages National Investor Publishing for some follow-on media work and additional outreach and so forth, of which this video is a part. I think it's especially important right now, and especially opportunistic, frankly, where Prairie is concerned, given a couple of things. One is that in the recent past, we actually saw the oil price drop into the 50s for a while per barrel here in the U.S. It's since recovered. As I'm recording this, we're back in the mid to upper 60s, which is okay for most companies that operate and make money at, but it certainly isn't going to incentivize a whole lot of new investment on the part of the average company. Secondly, where Prairie itself is concerned, I think it's a very misunderstood story. This is a company that's not, they're not an ExxonMobil or an Occidental or anyone like that. So they don't get followed as much by the institutions. Although in this case, as you'll learn from Ed, there are a number of high profile and big name institutions that have invested in or are otherwise behind Prairie. But as far as the overall size of the company, what they've done is to find, I guess you'd call it a sweet spot in the market. And I've talked about this theme as well when it comes to other commodities. We've had a few precious metals stocks among my recommendations recently where the light bulb went off over investors' heads, so to speak, and they realized that, holy cow, this is a better story that was kind of getting lost amid everybody else out there. But these guys have got a unique, story. They've got unique finances, whatever. And I think the same is going to be true down the road where Prairie is concerned because they have put together quite a nice property package. And here, if you look at this map, they are in northern Colorado, not too far from Wyoming state line. And you see way over in the upper right, there's Nebraska as well. But they're in what is called the Denver-Julesburg Basin. It's not as well known as some of the other ones. Prairie has put together a nice package of assets after a series of transactions, and I'll put that slide from their deck here on a screen right now. But very nice kind of a roll-up story, as some people term it, where they've been able to find smaller and mid-size assets, put them all together, and build a really nice company with, frankly, an astonishing growth profile is going ahead just over the next year or two as they ramp up production, ramp up cash flow, etc. I was privileged to go out there back in the end of April, along with a number of other analysts and newsletter writers and so forth, and we kind of got a home show, if you will. with a couple of the main assets, one that's out now producing, that they were getting all of the fracking equipment ready for. As you see, when we were out there, a remarkable and very labor intensive and equipment intensive project to frack a number of wells. They're now producing those wells. That was a project that they acquired from a company called Bayswater. They closed on that transaction back in March. And they were finishing up the drilling at another project called Rush. And we were there to see the big precision drilling rig in operation. And that's quite a sight to behold. And again, very not only is it an enormous piece of equipment, but the way in which this thing works and can literally crawl around the ground to drill one well, and then you move X number of feet and drill another well and whatnot. It's remarkable. And again, it's not an easy process or a cheap one to produce energy that we need in this country. And I saw that up close firsthand. Kind of a summation of that field trip that a lot of us took is in this video that I want to share with you real quick. It's just over a minute and a half long, kind of jazzy, but this will give you a kind of more animated look at the main center of gravity, if you will, of Prairie's operation. So take a look at this real quick, and I'll be right back.
My name's Ed Kovalik. I'm the founder, chairman, and CEO of Prairie Operating Company. Today we brought out a group of investors and newsletter publishers to show them our operations. We're visiting the Rush pad. We're drilling 11 wells, a combination of Niobrara and Codell wells, and right now drilling the 5th out of those 11 wells. The Prairie Opal Coal Bank site, we're getting ready to complete 9 wells behind us that have been previously drilled. Brings me a tremendous amount of pleasure bringing people out here and showing them just how innovative what we do is. Very simply put, we're a pure play Colorado oil and gas company focused on aggressive growth, both through the drill bit in terms of our organic development program and through acquisition. We love operating in Weld County. As you can see all around me, this is a great rural environment to operate in, and we couldn't be happier to operate anywhere else in the world.
As you'll hear from Ed, between a fairly aggressive ramp up as the near-term months come and go of their overall production, good cost structure, they're under $40 a barrel for their overall costs for production of a barrel of oil or oil equivalent. And also given that they've got a good sound hedging program in place, which is already very much in the money, because they did this at some higher prices a little while back. This is a very, very sound play, in my opinion, and indicative of that is the company that they keep when it comes to the big investors and investment banks that have handled their various financings, and that just before we recorded this video, were out to renew the company's credit facility and adding to the list is Bank of America. So there's no slouches or no fly-by-night banks here. They all recognize that this is a well put together company, very meticulous and a very sound cost structure, I think, with everything. Not to mention the fact that even at the current oil price, and with their plans to be ramping up production in the months ahead, this thing is going to turn into a hell of a cash cow potentially in not too long from now. Contact the company. As I said earlier, they can share some of this with you in their own insights and things like that. And last but not least, coming up fairly soon, before we get too deep into summer, I'm going to have a standalone sector report on energy. We're going to have actually a few different special issues. One will focus solely on what I call old energy, chiefly oil and gas. A lot of interesting information in that as far as where the broad market is going, not only in the US, but also in Canada. And there'll be profiles of a few companies in there, including Prairie. So you don't want to miss that. If you're not already on my own mailing list, make sure you get on it so that you're going to be automatically in line to get that issue when it comes out. And here is once again my friend Ed Kovalik, who is a founder and chairman and CEO of Prairie Operating Company. Ed, I'm glad you could join me.
Chris, great to see you today.
Well, likewise, it wasn't that long ago we saw one another, as I showed before you came on. That was quite an impressive thing for me to see your operations out in northern Colorado, and we're going to get to that, some of those details here as we go along. But before we do, for those who haven't previously heard of Prairie and specifically how you got involved, you have got a good resume, mostly with private companies that you build up, able to monetize a couple of those in the past, but talk about stars aligning. You got together with some good investors and smart, savvy ones a few years ago and decided, hey, there's an opportunity to put together a company on the back of small and mid-sized assets, consolidate them, and have, in the end, a sum that's greater than the individual parts in this case. And you've done that. So give us a little bit of a Cliff Notes version of how all of this came about.
Well, it's a cautionary tale of never say never again. We'd come out of COVID and I told my wife that I wasn't going to do it again. And I got bored after kind of sitting around the house for too long and got back together with my old pal Gary Hanna and started strategizing on what we would do if we were going to build a new company. And we always loved Colorado because the Niobrara is and the DJ is incredibly consistent in terms of drilling results, frankly, more consistent than anywhere else in the country. It's also oily. We tend to be kind of oil biased as opposed to gas. And the economics of development were always really compelling in the DJ. And there were deals to go do, unlike other places that we've operated in the past, like the Permian Basin and the Williston Basin, where we just couldn't see how, two guys like us were going to be competitive starting a new company. So that's how the whole thing came together. The thesis was very clear and specific, which was to build a high growth, under-levered oil and gas company. The hope was that we would do that into an environment that was a little bit more friendly to our industry. And the hope was that the pendulum would swing a little bit towards, recognizing that the world needs all the oil and gas we can get, and we're not going to get replaced anytime soon by renewables or any other form of energy. And so it was into that sort of hopeful, environment that we decided to launch the company a couple of years ago with some like-minded investors as partners.
Well, I love when you talk about the need going forward for this. I've said many times, and it's appropriate to say it again, Ed, that I've really enjoyed the few times now that I've been able to go to one of your functions. And it's not just about Prairie per se, although we're going to get more into Prairie's own story. You guys are really evangelical about trying to get everybody to understand the fact that there is no such thing, as you guys have put it, as an energy transition. We have an energy addition going forward. And just recently at that function that you guys had out in Denver, the end of April, you again had Scott Tinker as a speaker there, and he went along on a field trip with us. Scott's one of the most brilliant people I've ever been around. When it comes to energy, he's a global expert, very highly regarded by everybody, not just people in the energy industry, because he makes the need understandable. And refresh my memory, not to get too far afield, Ed, but it's something like 2 billion people on this planet that can't even flip a light switch is about the number.
Yeah, it's a bigger number than that. I mean, Scott's really done, a great job in educating people on the fundamentals of energy because a lot of people believe because they've been told a lot of mistruths about energy. And the truth is, as you noted, we're really sort of in an energy addition period, which is to say, every year there's a greater demand for energy. And part of that is bringing, half of the world's population out of energy poverty. Half of the world consumes as much energy as, your refrigerator does in a year for their entire household. And so they're just starved of access to energy. And that's not just, for conveniences that we're accustomed to, like air conditioning and refrigeration, but it's for a basic way of life so they don't
Yeah.
have to cook indoors using, burning wood or burning dung and, really having a great percentage of those individuals die from indoor air pollution. So, I think the story of energy addition is great to tell.
And even in this country, Ed, which is the sweet spot that Prairie is stepping into, we've heard a lot of stuff in the recent past about peaking production. Some of those areas you mentioned, like the Permian, like Williston and others, we've seen production start to roll over. Generally speaking, though, the DJ Basin, Denver-Julesburg Basin that you guys have got your projects in, this is not as far along production-wise. I think it's fair to say as some of these other basins, which is one of the advantages of being there, isn't it?
Yeah, the DJ Basin is also a fairly mature basin compared to the Permian and the Williston, for example. But it does tend to have lower decline rates
Right.
on production, and it's a much smaller area. I mean, we tend to like it simply because it's sort of a roll-up opportunity for us because there aren't really competitive public companies trying to do the same thing. Chevron had bought PDC a couple of years ago and stopped buying things. And the only other public company there, the mid-cap public company, is Civitas. And of course, they've kind of become a multi-basin company and also focusing in the Permian. And so it's left a lot of the smaller operators there without a bid, so to speak, which has enabled us to do really good deals, which is one of the things we like about it. But, I think that further to sort of where we are, in the US production overall, everyone's got a different opinion. My own opinion, for whatever it's worth, is that we probably have peaked or reached a near peak of production in the US. The reason for that is really a multitude of facets. One, we've had a lot of consolidation in our industry, really starting pre-COVID, but then accelerating post-COVID. So there are far fewer companies at it today than there were sort of in shale 1.0 and 2.0, so to speak, in the 2000s and 2000 teens. And as a result, there are far fewer drivers of growth in the industry. The other thing that people have to remember is that shale is a very aggressively depleting asset. So when you drill a well, you put that well on production, you'll typically produce 60% of the well's reserves in the first 3 years. So it's a constant treadmill to maintain production, let alone try to increase production. And so, we've seen a recent decline in some rigs in the United States, predominantly out of the Permian, and really as a reflection of oil prices dipping into the 50s for that abbreviated period of time. And with that decline comes less capex. Well, those wells that you're not drilling are going to, be fewer wells making up for all the decline of the wells you already have on production. And so just that annual replacement production that you have to put in place just to maintain 13 million barrels a day is a huge, huge number just to maintain. So again, for whatever it's worth, I tend to think we're sort of at a peak level of US production.
Well, and I think a lot of the facts out there corroborate that, and it puts you guys in a nice position because you've taken on the financial obligation to do a lot of accretive acquisitions. Most recently, the big Bayswater acquisition, of course, earlier this year. So the money's spent, everything is in place. Importantly, you've hedged a lot of your production. So you've got some protection if were to see, who knows? We don't, neither one of us has a crystal ball or a tricked out DeLorean, so we don't know if there's going to be any renewed weakness in the price. But if there is, you're covered. And you've got some, good upside as well. You've got a lot of production upside, in fact. So you discussed, Ed, a little bit about this treadmill. One of the things that I found remarkable, because this is the first of these kind of things I had ever been to. I've been to my share of drilling rigs for, hard rock mineralization and stuff all over this
Yeah.
hemisphere. That's one thing. It's a whole different kettle of fish. The amount of equipment, the size of the equipment, everything else. Not only to drill, but then to start producing. Now, refresh my memory, the field where you're now producing, you were getting ready to frack all of this when we were all there at the end of April. It's like something like two jet engine or their equivalents, that's the power plant to drive all this.
Yeah, it's kind of neat when you go out there and
Damn.
you see the sheer amount of power. We've got, a couple turbine engines off of F-16s creating something like 3 megawatts of power that
Wow.
are, powering 14,000 horsepower to frack our wells. So it's an awesome display of American horsepower.
That was remarkable, and I've told the story several times since I was out there that I watched a forklift with a long boom have to pick up each individual power cord, the diameter almost of a telephone pole, and place them. And then you got a couple of beefy guys on either end of these things, horse them in a position. This is not, this is a very labor and equipment intensive operation. And it's no wonder that the drill rig count has gone down recently because, whether the president wants his drill baby drill or not, it ain't happening at $60 a barrel. You guys are okay.
No,
But nobody
no.
else is going to commit fresh capital, I think, at this point for the most part.
No, that's right. As I noted earlier, the industry's pretty mature and disciplined at this point,
Yeah,
uh, protecting margins on inventory that's declining every year as it's being drilled. So I think there's not a great appetite to go, develop a bunch of inventory for less than optimal margins. And, as much as people want to talk about oil price being expensive or inexpensive, I'm just a math guy. When you look at the math, oil prices are actually really, really cheap.
yeah,
And, when you factor in inflation, there's about 15 to $20 layered in oil prices compared to when shale began. So back then, 65 to $70 was sort of the, long-term price perspective on US shale. Well, that's a 80 to $85 barrel today, and we're well below those numbers. So
right.
I don't think you're going to see drill baby drill unless and until we're above that level.
Oh, I couldn't agree more. For your guys' purposes, though, particularly your hedging program, and I noted at the beginning before you came on that the latest analyst report out on Prairie was put out by Roth just this morning as we're recording this on the 12th of June. And I'll put it up here on the screen again. And of course, these are their numbers. You may go higher or lower. We don't know yet. These are their analysts. But whatever you think the eventual numbers are, I mean, you guys are looking at a pretty sizable ramp up in both free cash flow and in bottom line earnings per share, which I mean, it makes your current share price in the market that much more absurd to look at it, how cheap it is, in my opinion. What is the kind of drop dead cost per barrel, Ed, that you need to meet or exceed? And notwithstanding the hedges that you've got, but your cost
Sure.
situation.
Yeah, so our break-even prices are about mid to high 30s per barrel. Obviously, we make some money at $55 oil. We don't love it though, for all the reasons I stated below, because we have such high value inventory. Every dollar above that is just pure margin for us. So we want to preserve that inventory. But, we're also big believers in taking risk off the table, which is why we aggressively hedge. Anybody that wants to bet on oil prices can go do that without investing in Prairie. They can just buy the commodity
Right.
and trade it and hope they outsmart the market. I'm not that smart, so I like to, you know, undertake a philosophy that minimizes our risk on a go-forward basis through hedging. So that's a core principle of the company, as well as being under-levered, so we're never up against the wall. But look, at the end of the day, we have a great cost structure. I think the whole industry has innovated around cost structure since inception to drive down break evens as a whole and be more disciplined. So it's just a reflection of a maturing industry.
Sure. So by the end of, let's look at a couple of mileposts besides those financial ones. And of course, this next question, Roth based, I know some of their numbers on this, but I wanted to hear it from you and your perspective, Ed. By the time we get to the end of 2025, the one project that I visited with you that you were getting ready to frack, you're producing there now, going full tilt boogie, I guess. There's more development upside. Where are you going to be, you think, at the end of 2025 and then looking ahead as best you can to 2026 as far as your average production per day?
So we haven't put out any revised guidance, Chris.
Okay.
I'll pause on getting too specific there, but we have said that we're going to grow at a double-digit rate
Okay.
and remain underlevered relative to our peers, and we're committed to doing that. We'll put out updated guidance on our next earnings call, which will reflect, the consolidated company as a result of having done the Bayswater acquisition. And so every CEO feels like their stock is undervalued. I would emphasize that we really feel like our stock is undervalued, but there are also reasons for it because we're new. We haven't yet issued consolidated numbers pro forma the acquisition, so the market's not entirely, up to speed on how to value us. And so I think that as those things happen, we'll be able to optimize our valuation, but it's a great time to buy the stock for that reason.
Well, and to be fair, too, it's not just you guys, Ed. I mean, the whole energy sector got their butts kicked in the recent past when the oil price dropped, like you said recently, spent a little bit of time sub $60 a barrel. Now we're back above that in the last
Mhm.
few weeks, several weeks, whatever it's been. But so is everybody. But it's interesting again if you look at your current share price, which is around $4, give or take a little bit a share. If Roth is correct, and I'm not going to ask you to say yes or no because we don't know yet, but if they're correct, you're going to hit that, the better part of that in earnings by the time you get to the end of 2026, and that has to bring about a re-rating. And I'm bullish on old energy. I don't necessarily think we're going to go, ridiculously high again, but it's like every other commodity you can look at. We need ever more of it, like you and I were discussing a while ago. The cost to produce it has continued to go up, though some of you are doing better than others to keep overall costs down. And you with your overall costs sub $40 a barrel, that's not too shabby. But still, we need more and more going forward. And every time you turn around and these big three-letter global agencies are saying, oh, there's going to be a fall off in demand, there's going to be this, there's going to be that. There seemingly never is. I mean, the demand keeps going
No,
up.
no, we've only seen two cases of demand destruction, and they were both financial markets driven. One obviously being the credit crisis in '07, '08,
Right.
where you saw a small blip, and then COVID, where everybody stayed home for a year, you saw a small blip. But that demand is extremely elastic and bounces right back with a vengeance. And so it just comes back to the fact that the world consumes more energy every year than it did in the prior year.
Exactly. And as you said that, I put another chart up that I had on earlier once again so people can see that. I mean, you need a magnifying glass to look at this accelerating spike overall in energy demand over the decades. You need a magnifying glass to see those two little brief hiccups that left almost as
Yeah.
fast as they came. Well, you guys are obviously pursuing a good sound strategy because it was only a few days ago that you announced that your is it $1 billion overall credit facility with a consortium of people has been is renewed. Is that the correct terminology?
Yeah, no, that's correct. We go through semi-annual redeterminations of our credit facility. It's great to see the confidence that our credit facility partners have in the company and redetermining us the same value. We also added Bank of America to the syndicate, which we're really proud of. So, we've been able to build a really institutional, high quality group of banks participating in our credit.
Well, and not only Bank of America, but you've got some household names. What's impressed me along the way is you've done a couple of different financings to build this company, Ed, is that you've got some of the bigger and more venerable conservative names among the investment banks and so forth. These are not the kind of people all tripping over one another to fund AI stories and everything else that, might be, fleeting. These are as solid a names as they are. And so that speaks well, I guess, also to your strategy and everything that you've done. And folks, I said earlier, and I'll say again in closing, that, we've already seen where some commodities have recovered more recently in recent months, precious metals, that a lot of companies that were dormant, all of a sudden, especially the producers or near-term producers, investors don't pay attention. All of a sudden, they see the price of the commodity recovering. They look at the finances of the individual company that's kind of got lost in the forest with the rest of them. It's like, holy cow, a light bulb goes off and they take right off. And I'm quite confident, Ed, which is why we've got, our household as shareholders as well, that you guys are going to see that one of these days. You're going to get that recognition you deserve. There's a lot to digest. The sentiment still is certainly far from perfect in the energy patch, but you guys
Yeah.
are one hell of a company. You've got a lot of great, smart people and a lot of help along with it. And so, congratulations. I'm looking forward to the next couple of quarters because I think that's going to start to, get the light bulb's going to get a little bit brighter over people's heads when they see some of this.
I believe that's going to happen as well, Chris. And, it's just a process. We're a fairly new company. So we're not that patient at the end of the day, but you got to be a little patient with the
Somewhat.
market, getting efficient in how they value you.
Sure. Well, folks, here again on the screen is the information to keep in touch with Prairie. Make sure you contact their investor relations folks if you want more information. Get on their mailing list, follow them on social media, etc. And yours truly as well. Make sure that you're on my list if you aren't already. As I said at the outset, imminently we're going to have some sector-specific, kind of catchy stuff out there on energy, in which we also profile Prairie, along with a couple of my other top favorites in oil and gas and the different services that go with that. So I want to make sure that you get all of that as well. So Ed, congratulations on everything you've accomplished to date. And as I said, I'm anxious for ever more to come.
Thanks, Chris. Really appreciate the time and you having me on.
Take care.
For much more of the National Investor's cutting-edge content and actionable investment opportunities, make sure to subscribe to Chris's free content at nationalinvestor.com. And don't forget to like this video and subscribe to this channel too. Thanks for tuning in, and we'll see you next time